What's going on, guys? It's Stas here. Welcome back to another video. As you guys read in the title of this video, I just wanted to do a quick little trading update for you guys and pretty much just go over the top couple of trades that I ended up making today on July 11th in 2018. And for those of you guys that are new to my channel, my name is Stas and I make videos dealing with swing trading, day trading, long-term investing, and my personal philosophies and strategies when it comes down to investing and trading in the stock market. So for those of you guys that are interested in learning more about all these different techniques that I use in trading and investing, feel free to drop a like, leave a comment, and subscribe, and let's get started with the topic of this video. So for those of you guys that were able to tune into my video yesterday, I was talking about how I had a position in DGAS, and this is one that I've been scalping for the past couple of days. Like I mentioned in yesterday's video, I initially got in at about 24.80, I believe on Monday, right? Then I got back in again at about $25.30, and I took another position up here at about $25.90, and my overall position is right about at like $25.40, and I'm in with about like $2,500, something like that. And we saw today that DGAS took a 4.3% hit from its high of $26. And right now, guys, I'm down about 2% in my position on DGAS from $25.40 down to about $24.85. And I still plan on holding this particular ETF through the natural gas report tomorrow. And pretty much, guys, what I plan on doing with this one, if you guys didn't catch my video yesterday, is that my sell target price is $27.50. And why I still believe natural gas does have opportunity to get there is because if we see here on this 180-day chart really quickly, we see that natural gas still has yet to break above this 50-day SMA line. And, you know, we've seen natural gas do what it's doing right now today, which is pretty much, you know, it had a green day, it had a recovery day today, but it's done this pattern a couple of times already. It tried to pop up a little bit above the EMA line and try to shoot up from here, right? Once it got rejected there, tried to do it again here, got rejected, tried to do it again here, got rejected, tried to do it again here and got rejected. So we're seeing a common pattern with natural gas. You know, it's shooting up a little bit, trying to peak above that EMA line, trying to start that uptrend pattern, but then it's getting rejected with the EMA line, you know, acting as a resistance level. And right now, guys, you know, it's starting to do that same exact thing. It's peaking a little bit above the EMA line, but I still predict that natural gas does get rejected here, and I'm going to explain to you guys why right now. So we see, guys, it's been consolidating at that price point at about $2.82 pretty much since 11:30 a.m. And what this pretty much means, guys, is that it's kind of struggling to break above that 50-day SMA line that we were talking about just 2 minutes ago, right? It's struggling to break above this particular SMA line as it's been consolidating at about $2.83. And my predictions, guys, you know, is that natural gas will open up red tomorrow, which means that DGAS will open up green. And again, this is just my prediction, you know, from my technical analysis and the understanding of the pattern that I've done, right? And make sure to do your own research and own due diligence when it comes down to investing, and do not just buy DGAS based off of my personal opinion. You have to really understand what you guys are investing. So pretty much that is why I'm looking to continue to hold DGAS through the natural gas report tomorrow, and, you know, maybe into Friday if all goes well. So that is what I'm trying to do with DGAS right now. And another position that I was in was LABD. I was talking about how I got in at about $21.80. I did add a little bit more to this particular position, right? If we go over here to the 10-day, 20-minute chart, I was in at about $21.80, like I mentioned, and I made another position today earlier on the dip at about $22.30. So right now my average position on LABD is about $22.05. So that is what I'm looking to do with LABD. And for those of you guys that don't know, LABD is another inverse ETF. Its inverse being LABU. And these two ETFs, they trade based upon SPS IBI, S&P Biotechnology Industry Index. And why I'm interested in LABD as of now is because we've seen a couple of red days since this index has hit this resistance level. And last time it hit this resistance level, guys, it pretty much bottomed down to about 7,300. Actually, it wasn't a resistance level here quite yet, but now that it's back to that price point where it ended up falling down, right, this could be a valid resistance level. And I'm in with a smaller position on LABD. I did buy more on the dip at $22.30, but I'm still in with only about $1,200 to $1,300 in this particular position because, like I've mentioned in a lot of previous videos, I don't really like going heavy into the downtrending ETFs, meaning the bear ETFs. We can see that all of these ETFs, the bear ETFs, over time, they're on a downtrending pattern. We see that clearly here with LABD. Another one clearly we see it with is DRIP, which also had a very good day today, and I'm going to be talking about that one after this one. And I just don't like going too heavy into these downward trending ETFs. And now that we're on DRIP, let's just talk about this one a little bit because DRIP had a huge day today, and I believe it's been up about 16% over the past 2 days. And I actually was not able to invest in DRIP because most of my capital is actually tied up right now, and I figured I would just wait till DRIP, tops out, which is it's looking like it's topping out right now, and I would just wait to get into Gush. And I actually took another position in Gush later on in the day today with my smaller account. Now, I haven't mentioned this on this channel yet, but I have a smaller trading account of about $800 that I'm trying to grow right over time. I started out with $500 in that account, and I've grown it up to $800 over the past couple of months. Just very doing 1 to 2 trades per week, very slow growth, over time on that account, pretty much just trying to prove to myself that I can grow a smaller account into, the thousands of dollars. So I took a position in my smaller account with Gush, I believe at about $41.10. And we saw DRIP, DRIP, like I said, 16% over the past 2 days. We could see it bottomed off at about $4.97. Let's just round that up to $5, and pretty much $5 up to where it topped today at about $5.85. That's 17%. So congratulations to everybody out there that was able to profit on DRIP. Very, very good trade here. But now I'm shifting over my focuses, like I mentioned, over to Gush. And I'm actually in because we see Gush, unlike DRIP, Gush is on an ascending uptrend pattern, meaning it's creating higher highs, it's riding the EMA line, the EMA line is acting as a support level. And what we pretty much saw here, guys, and I'm going to just delete these trend lines really quickly so I can just draw some new ones for you. Okay, so Gush has been going according to our plan in terms of this particular channel that we've been focusing on over the past week or two, and I've made a bunch of videos on DRIP and Gush. Go back to the previous videos and check them out if you guys want to. And we see that in this channel, it's been creating higher highs, and when it shot up all the way to $47, we see that the RSI level was extremely overbought, right? And DRIP, that's when DRIP was at about $4.97, right? And this is exactly, where Gush ended up topping off. And I knew at this particular point, Gush was going to have a big pullback, right? But I did not have much capital to put into DRIP, so I missed out on a huge trade in DRIP. But sometimes, guys, that does happen, right? And I'm focusing more onto Gush right now because it's looking to consolidate on this yellow SMA line. We see it's bounced there once here, twice, 3 times here. And if it's going to continue on this uptrending pattern that we're on here, it has a good chance to bounce right here at about $40 to $41. And we do see a nice green candlestick formed right here. I believe that is after hours. Gush is at about $41.10 right now after hours. And, there is a good amount of potential with Gush here from about $41 up to $47. That is a 13% trade, and if Gush does continue this uptrending pattern, it could shoot up to $50. Who really knows? And that is a 20% potential for profit. So right now, guys, my focuses are on Gush for the rest of this week. On DGAS, right? On DGAS, because the natural gas report does come out 1 hour after market open, and I'm in New Jersey, and my market opens around here at 9:30. So 10:30 here, the natural gas report comes out. So I'm going to be paying very close attention to that, and I'm going to be holding LABD as well. So Gush, LABD and DGAS are the 3 that I'm focusing on to finish off this week, and pretty much that is what I'm going to be updating you guys on in tomorrow's video. So I hope you guys enjoyed this video. If you did, feel free to drop a like, leave a comment, and subscribe. Follow me on Instagram. The link is down below in my description. @StriveSmart is my username. If you guys want to see my profits, I post everything there. Updates to my channel, personal things about myself, and just random stuff I'm doing throughout the day. So if you guys want to be in my community on there, I would really, really appreciate it. And make sure to do your own research when it comes down to investing and trading in the stock market. You have to understand how to do all these different things on your own, and in technical analysis, picking companies to invest in, understanding where a good buying opportunity is, and etc. So that is what you got to be able to do on your own in order to become a self-sufficient trader. So again, feel free to drop a like, leave a comment, and subscribe. Let's make some money today, guys. Peace.